President Trump wants US companies back in Venezuela, and he says they could get the country's energy infrastructure up and running in less than 18 months. There's going to be a meeting at the White House with energy leaders in the coming days. The president suggested their investments could be reimbursed by the US or through oil revenues, and many other businesses stand to profit. The problem, of course, the Venezuelan bonds, the existing debt, and what happens to that. Sanctions meant it had all gone into default, but those bonds and that debt still exists, and it provides a massive problem for any new investors. That's not my view. Robert Koenigsberger is the founder of Gramercy Funds Management. His funds invested in Venezuelan debt. Sir, you and I were talking. You were making the point to me, which I think is very well made, that this existing debt isn't just going to be written off or paid down or haircutted in favor of new opportunities. It's going to be dealt with.
Correct. Good evening. What we've seen historically in emerging markets over the past 35, 40 years is these old debt stocks have to be resolved before you can have the foreign direct investment that's being talked about in Venezuela or other portfolio investments. So, the interesting thing about sovereign debt is countries can disappear, but their debt obligations don't disappear, right? The former Soviet Union disappeared, but their debt obligations didn't. Or the Yugoslavia disappeared, but their debt obligations didn't. It became joint and several of the 5 subsequent republics. So what we've typically seen is the condition precedent to coming back to the capital markets and to drawing foreign direct investment is resolution of the previous debt stock.
And how urgent is that in relation to new investment in oil? Because that's private sector investment. That's not a bilateral government to government or IMF WB. That is going in. So if let's say the US government guarantees the investments and says, you go in there, we'll make sure that once you've got the oil out, you get reimbursed. Does that, I can see you're looking at me cynically on that.
No, I'm looking cynically only because I think the likelihood of that type of guarantee, it's never zero, but it's quite low. But I think you're right to bifurcate the difference between foreign direct investment that's directed towards the oil sector. I mean, let's be honest, that's continued and would probably be larger if it hadn't been for sanctions, despite the bond default. But in order to have the economy operate at normal levels, there needs to be normalization of some of these past liabilities.
Everybody's been telling me whenever we talk about the new opportunities, it's going to be decades, it's going to be years, the investment's got to be huge. But you've got some interesting comparisons vis-a-vis, say, for example, Iraq.
Sure. I mean, and I think Iraq's a great example in terms of the potential here, right? So, when the Marines invaded Iraq, they were doing about 1 million barrels a day. Today, they're doing 5 million barrels today. The economy was about 25 billion. Today, it's 250 billion. And I don't think you can argue that Iraq was a walk in the park relative to what we're seeing in Venezuela today. So the potential is huge. And, it happened faster than many would predict. Many predicted it wouldn't happen. And look, what happened over the weekend, people thought regime change would take forever to happen, and then it happened very quickly. The thing about oil companies is they think in decades, not years, not quarters, not weeks, not days. And so I think what's missing in Venezuela from an investment perspective today, put normalization relations and what have you aside, is let's remind ourselves that what happened over the weekend, you used the term decapitation. This was a removal, decapitation, and extraction of the leadership, but the regime remains in place. And we have to remind ourselves that that regime continues to have sanctions in place. In fact, the president herself and the head of the legislature are sanctioned individuals. So before, you just can't simply get on an airplane and go to Caracas and start knocking on doors. There needs to be a liberation of the sanctions environment as well. And I would expect that's going to be an incremental process. I think foreign direct investment from oil companies will be an incremental process. And I think this transition towards where I think the Trump administration would like to go, I mean, I think the hope everyone had that Maduro would leave and Machado would come in. But I think the Trump administration decided that the Maduro to Machado bridge was just too far. So you leave the regime in place. Like, what would it have looked like had Maduro left voluntarily? I don't think it would have been Machado overnight. You would have had to deal with the regime, and then you would try and steer the regime towards a transition. And we've seen plenty of that in Latin America historically, right? Like Daniel Ortega, ran the dictatorship in Nicaragua in the 1980s, had an election lost in 1990-91 to Chamorro, but then came back democratically. And we've seen that in Colombia, and we've seen that in El Salvador, and we've seen that elsewhere. That's probably the best path for the Chavistas going forward. But I think we're witnessing evolution, not revolution.
I'm grateful, and we'll talk more as this evolution continues and you guide us through what's happening. Grateful for you, sir. Thank you.